Hello, everyone, and welcome to the FinDev Gateway webinar entitled What's Holding Digital Financial Inclusion Back in Your Country? Introducing a new tool for policymakers. FinDev Gateway is CGAP's independent knowledge platform where the global financial inclusion community comes together to share the latest research, lessons, and ideas on making financial services work for people experiencing poverty. And our series of FinDev webinars allow financial inclusion practitioners like you to share lessons and attend online presentations and discussions delivered by the world's leading financial inclusion experts. My name is Abby Augusta. I'm an editor for FinDev Gateway, and I'm joined by my colleague, Sarah Edwards, who is supporting us on the technical side for this Zoom webinar. She's available in the chat if you have any audio or video or connection issues that she can help with. And before we get started, I just wanted to share a couple of notes on logistics. First of all, this webinar will be recorded, and the recording and presentation will be available on the FinDev Gateway website after the webinar is finished. And we will also email the webinar recording to all participants. All attendees also will have their microphones muted automatically, and we also ask you to please keep your webcam off during the webinar. So to ask questions during the webinar, please use the chat box, which is usually located on the right-hand side of your Zoom window. We invite you to submit your questions at any time during the webinar, and we'll address them in the Q&A session at the end. And just to ensure your question is seen by the moderator, select everyone from the drop-down menu when you send in your question. With that, I will hand things over to Liliana Rojas Suarez, who is Director of the Latin American Initiative and a Senior Fellow at the Center for Global Development, to introduce today's webinar and our speakers. Over to you, Liliana.
Thank you so much, Abby. Good morning, good afternoon, good evening to everyone. It's a pleasure for me to be here and introduce this new tool on trying to identify binding constraints for digital financial inclusion. I am going to be joined after a brief presentation that I will make to you right now. I'll be joined by the three panelists that you have in front of you right now, Solomon, Mook, and Miguel. I will introduce properly after I finish my brief presentation. Okay. Just give me 1 second. There we are. So this is a course that is trying to identify binding constraint for the purpose of improving digital financial inclusion. So the course itself, the most important objective is to support policymakers that are in charge of designing and implementing financial inclusion strategies by providing an analytical framework to identify country-specific binding constraints. So the course is trying to move policymakers away from focusing on constraints that must not be the most relevant. You know, financial inclusion is constrained by many barriers, but the question we are asking is, which is, of all the many possibilities, which is the real binding one? So, as we say in the presentation, the tree is a decision-making tool to help it identify those constraints to financial inclusion that are truly binding. Now, the decision tree, I have a little bit of a problem moving slides. Maybe, Abby, you can take from me and I'll say next. Is that okay with you, Abby?
Yes, of course.
Okay, right. So the decision tree follows a deductive approach. It basically says, all right, there are many obstacles and there could be coming from supply factors or from demand factors. We don't know which one, right? And this tool is going to tell you how to identify where are those constraints located. So the tree basically starts with the idea of, okay, you can have several constraints on the demand side, on the supply side. So let us start looking at each of the potential possibilities within the supply side. And then if you recognize one as possible, we dig further, yeah, to try to identify whether within that constraint, you can identify more specific details on where this constraint really is. Next one, please. So if we actually go through the branches of the decision tree, and this is for your information, I'm going to go quickly through the different branches. On the supply side, basically this what it's saying is, the question that is posing to you is, what are those constraints that are limiting the provision of services by bank and digital services provider? What are those constraints? Where can they be? Well, there could be problems in the market structure of banks or telecoms and other digital financial service providers. But is that a market structure due because of lack of competition? Or is because an unlevel playing field in regulations that does not support competition? So it could be because of the market behavior of participants or because of regulations imposed by regulators. Or could it be that the real problem is that there is not enough digital financial infrastructure to provide these services? Or it could be that there is low appropriability of returns. What does that mean? That investors try to invest into these services, but they really don't get the profits, the rents that they are expecting to have. And why that can be, and that's why we dig deeper into that. Well, it could be that there's a lot of problems in the institutional way that the country and the financial sector is organized, or problems in governance, or it could be because there are distortionary taxes that do not allow to actually make these profits reality, or the providers may not be able to identify consumers, KYC problems, right? On the other hand, the problem may not be on the supply side. It could be on the demand side. And so the question now is, what could be putting barriers to the demand for these services? And again, there is a number of alternatives. It could be because the consumers actually perceive that these services are not useful to them. And at the same time, that perceptions could be due to a lack of financial literacy or restrictions that are more associated with social norms. For example, countries that put limitations on women using the services. Or maybe it's not perceptions. Maybe it's a question that income of those participants are so low that really they think that, what's the point in getting the services? Or maybe they don't trust providers, right? Because maybe there was a financial crisis and they just don't trust providers. Next one, please. So this course basically allows you to learn the decision tree methodology and apply it to your specific country. Try to identify the constraint for your specific countries. So this is ideal. The course is really good for policymakers, research students, and professionals. Next one. If you are interested and you take the course, you're going to see that there is so many materials that are supporting your learning. There are animated videos that are going to explain each of the steps very carefully. There are interactive lessons. There is a case study of a fictional country that we invented that we call Euros. And basically, the course will navigate you through Euros as an example. And Euros will find some binding constraint. And this will give you hints on what should you be doing. And the most important thing is that you will have to do a lot of exercises with data that the course provides. So you are going to be comparing your country with many other countries in the world, and the data would be in the course. Next one, please. And actually, the volume and variety of data that is available is really large, right? So we provide data, and you will have to work with data on fees for providing the services, on governance indicators, on national ID coverage, on indicators of market competition, on surveys, basically asking whether there is a problem with the perceived value that consumers have about these services. Next one, please. So you will say, okay, we have all this data, we have this score, we have the lesson, but how do we really identify binding constraints? Well, we use something that we call principles. Principles that you will be following in the course to try to see whether they apply to your case. And in these principles, I want just to illustrate one because it's a very powerful one. You know, most people, when they start looking at financial inclusion problems, they look at quantities. They establish, okay, my country doesn't have enough access to digital financial services. What we say is, yes, quantities are fine, but not enough. You need to look at prices. How expensive is actually to use the services? And why we need to look at prices? Because they help you to identify whether a constraint is on the supply side or a demand side. So if you look at these very simple graphs, right, where you have a supply and a demand curve that most people know what they are, and if you don't, it's okay, I'll explain. Basically, you can have a situation where low usage, which is common to every country that have digital financial problems, right? So you have low usage, but the price is very high. If the price is very high relative to other countries or relative to other products offered in your country, that means that hints you that the problem is a lack of supply. The supply is very low, and that's why the price is so high. On the other hand, what if you observe, again, low quantities? Low quantities is always there, and you know, I mean, that's a problem of digital financial inclusion. But what if prices are low? That means that even when prices are low, consumers don't want to use the services. So that is hinting that there is a demand side problem. Next one, please. So the course is going to offer you an enormous amount of data with prices from digital financial services, things like, okay, what is the fee that is being charged for making a transfer from one mobile phone to another, or for withdrawing the funds from your mobile money account. So you have a large amount of data that you will be able to use and make comparisons with your country to actually identify whether it's a supply side or a demand side constraint. Next one, please. And as an example, this is the case of Indonesia. I know it's a little bit gray here, but Indonesia is the second country in the graph, okay? And basically what you have to look is at the red dots. This graph, what it's showing is a number of countries here, what we call comparators. And on the vertical axis, what we have is the fees charged for making a transfer as a percentage of people's gross national income, what we call GNI, okay? What it tells you is that the prices in Indonesia fluctuate between these values and these values. And certainly, these values are very high relative to the majority of the other countries. So this is hinting, remember what I said, high prices signal a supply side constraint. So this is signaling that in Indonesia, you should be looking for problems in the supply side. Well, using these and other principles that we provide in the course will help you to identify specific binding constraint. I cannot extend more on the other principles because we don't have time for that and we want to have our discussion. So next, please. But if you are interested, here's a QR code that you can, just take a picture if you're interested, or there is a website that you can go to. And so let's stop here with this presentation, which has the basics, and let's go to a summary video that is going to wrap up everything that I just said in a minute and a half.
Digital financial services can help alleviate poverty and catalyze economic development. But suppose you're in a country where many people are not using these services. There are many possible causes. Which are the most significant? How can you find the root of the problem? Policymakers now have a new tool to answer these questions, the Decision Tree for Improving Digital Financial Inclusion from the Center for Global Development. The tree helps policymakers examine the constraints on the supply and demand side that might prevent people from accessing digital financial services, such as limited competition or low trust in providers. To start, look at how high service fees are in your country compared to others with similar characteristics. High costs for using digital financial services can signal a supply-side constraint, while low costs suggest that demand constraints are more pervasive. Then, look at times where service usage significantly increased or decreased in the past. What changed that encouraged people to modify their behavior? The answers can help you pinpoint the binding constraints on service usage and discard less important factors. By using these and other principles of the decision tree, policymakers can identify binding constraints and prioritize and enact the changes that will boost financial inclusion and benefit their countries. Learn more at digidev.org/decision tree.
Okay, thank you so much for this. And now let's move to our wonderful panel. And let me properly introduce the three of them. We have Solomon Dantiu, which is work for the National Bank of Ethiopia. He's the Director of Payments and Settlement Systems there. Then we'll be joined by Muuka Madubeko, the Assistant Director of Payment Systems Development and Operations from the Bank of Zambia. And finally, Miguel Sikeli, who is the Director and Founder of the Center for Education and Social Studies in Mexico. Welcome to all of you, and thank you so much for joining this discussion.
Thank you, Irene.
Yeah, I mean, great having you here. So we are going to organize our discussion in 3 rounds before opening to questions from the participants. So on the first round, let's discuss about the relevance of the decision tree methodology. Let me first tell the audience that both Muuka and Solomon were helping us to try up the course, and they were involved in the pilot. So they know everything about the course. And Miguel, a couple of years ago, did a case study using the decision tree methodology for Mexico. So we really have a very well-versed panel. So let me start with you, Miguel. FinDev, which is, of course, the World Bank most comprehensive data set on financial inclusion, basically reports that only about half of the adult populations are financially included. And this measured by account ownership, being it a bank account or a mobile money account, any kind of financial account. Now, this is a very low ratio in Latin America. So this is kind of disappointing, especially because FinDev reports that most countries have had an enormous amount of progress. Why is the decision tree methodology relevant for Mexico?
Well, I would say firstly that the main usefulness of the tree is that when you're in a decision-making position, I say this because I worked in the government of Mexico for several years in the social sector and education. When you are in the decision-making position, it's very difficult to prioritize because there are many problems to be solved. There are many demands. So just identifying which element of the set of problems will trigger solutions for others is really, it's like a gold mine. It's you're looking for that golden token all the time, because if not, it's impossible to solve 50, 100 problems during the time that you're in that decision-making position. So prioritizing is crucial always, because you have very limited time and very limited resources. The decision tree methodology allows you precisely to do that. And I'll illustrate it with an example that already Liliana mentioned, which is prices. Let's say in Mexico, we have relatively low usage. We used to have relatively low usage by international standards. And the first thing, if you look at the first thing, which is prices, you would say prices are too high. And you could say it's a supply side, or you can intuitively think it's a supply side problem. But one reaction to that could be, let's control prices. Let's lower them artificially. And in that way, you will have many more people accessing. Well, that would be a very wrong way to proceed, because you would be combating the symptom rather than the cause. And what the decision tree methodology allows you to do is, in a very structured way and in a very orderly way, identify and separate which are causes and which are symptoms. So I would say that is the main issue. And if you're able to identify the real underlying causes, then you will be able to very precisely target that and allocate your energy, distribute your resources accordingly to combat that particular cause, which will solve many of the symptoms that you see.
Thank you so much, Miguel. That's really, really helpful when you said that it's just, focus on the causes and not just on the symptoms, right? I mean, because, if you do just the symptoms, you may actually not get to what is really binding. That's a very good point. Solomon now. So the results, in a way, are similar than Mexico. In Ethiopia, only 50% of the population have a financial account. And this is actually below the average for sub-Saharan Africa. So could you please share with us your views about why the decision tree methodology is useful in Ethiopia as a tool to guide financial inclusion strategies?
Thank you, Liliana, and thank you for inviting me for this webinar. Yes, as Miguel was saying, this course was really helpful particularly for me as a policymaker in the central bank, to really systematically identify the root cause of the financial inclusion problem. So in Ethiopia, as you already said, that we stand at less than 50% of financial inclusion rate. So it is very, very difficult to identify the root cause. And there are also many causes are there. And the policymakers, like people sitting with me, is very difficult to differentiate the symptoms and the causes. So this course enabled the policymakers to deep dive into an identification of what are the root causes for those for the problem of financial inclusion. So all binding constraints looks like the causes, yes, of course, but it requires a deep understanding of the situation to identify and prioritize which are the critical binding constraints to which the policymakers has to do. So one of the important issues that I learned from this course is that it enabled me to systematically think and a step-by-step approach to identify the critical cause. The other is how important to prioritize those binding constraints. We are not able to do to solve all of the binding constraints within a short period of time, because we have even the constraints in resources, time as well. So it helps to prioritize which binding constraints are really critical, and how long it will take to solve it, and which institution, which stakeholder has to do on that, whether it is a regulatory initiative. But one of the important issues is it is very important to prioritize those constraint bindings. The other is it also provides an opportunity for me to compare the status of the Ethiopia with other countries. So one thing that I learned from this course is that it gives an opportunity to draw a lesson from other countries which have successfully, overcome some binding constraints that helped to adopt the approach that that country has, used to solve such constraints. So in this circumstance, I can say that this decision tree methodology is a very, very powerful tool for policymakers in terms of two things. One is in terms of identification of the root cause, and in terms of prioritizing of those binding constraints. Thank you very much.
Thank you, Solomon. Okay, Muka, your country is much better positioned than Mexico and Ethiopia. For Zambia, FinDev report that about 75% of the adult population owns a financial account, and that's one of the highest rates in sub-Saharan Africa. This is a great result, but it still means that there are 25% of the adult population that are excluded. So why is the decision tree methodology useful in this context?
Thank you, Liliana. Just to make mention that I think over the years, as a country, we've made a lot of strides to ensure that we push the levels of inclusion in the country, and we have seen that since 2015, when digital financial services, I think we are not noted and known by most of the Zambians. We saw a rise in the level of financial inclusion between 2015 and 2020. I think 2015, when we first assessed financial inclusion in Zambia, we found that it was just about a small number of the population, about 14% of the adults were using digital financial services. When it came to 2020, we saw that there was a rise because of the interventions that were made by the central bank and other key stakeholders in the ecosystem, to about 58% of adults using financial inclusion. And we are currently conducting our next FinScope survey to just gauge where we are. And we are happy to see what we have seen of the FinDex, that most of the metrics are showing that we are trending upwards. And this all counts to the efforts that have been put through by various stakeholders in the country around financial inclusion. And coming to the decision tree, what I would say that what the decision tree does is that what impressed me about it is that the way it brings information together in one place, and how you can think through in a structured way. For instance, you look at the supply side, you're able to group various factors into, for example, the six areas identified at the supply side. You'll be looking at limited competition. What can we do to spark competition within the country? And level the playing field, we've got banks and mobile money operators. Is a playing field level. What can we do in that space? So you're able to group this in a structured way and able to perform, I think, structured assessment. And there'll be more clarity in terms of the output of your work. And you are more focused, and it becomes more like you're holistic in the approach around the work that you are doing. So I was very intrigued and impressed with the way the information is organized. And when I look at the sources of information as well that you are looking at, I think you have a lot of information that you have put together in the course, and it helps anyone using that information to even improve the way they analyze information, put together information, and also support their views with evidence. So you look at supply side, all these are covered by various international databases that were used. For example, I recall in my study, when I was doing the study, I recall that you had looked at the GSMA index, you had looked at the International Telecommunication Union database. I think the Economist database has also have looked at it, the Economist Intelligence Unit Inclusive Internet Index, the IMS FAST, that's IMF Financial Survey, is something that was used. So the data was quite huge and very impressive to use. Though the step-by-step activities would take longer, one will be impressed because you're looking at comparatives between your country, within the region, the countries within the economic space, and against the world. And it will give you, I think, evidence-based information that you can then take forward in terms of increasing financial inclusion in your country. So I think that's my take. I think it's a very good tool in terms of enhancing clarity in your assessment, and facilitating for evidence-based solutions, and also you're able to prioritize what to focus on. Beyond the main key binding constraint, you may also be able to find what other areas can I also address They might not be binding as key ones, but you also identify areas. For example, limited competition, you identify something there. And level playing field, you'll be able to relate with what the market is saying. You look at the digital infrastructure, you're able to relate what is it that we can do there. In terms of governance, institution of quality, you're able to relate. Taxation processes, you're able to relate what can we do there to ensure that there is no distortion coming from taxes and various government policies. And then customer identity, do we need to go on boarding, digital onboarding and the like, and then that you're able to, in a structured way, able to assess that and using statistical data to be able to identify exactly where do we move and where do we rank compared to other countries. And also on the demand side, you'll be looking at redress levels. Good metrics are there for you to be guided in terms of what can you do to be able to measure the financial and technical redress that citizens may have. And then there are norms that may be stopping people from accessing these services. So it gives you that structure, looking at the incomes, the trust that they may have around providers. So that structure is well done. And also the coordination is one area that I liked, how you coordinate efforts across the market. So it's not one institution that is sparring or looking at financial inclusion. It's a whole host of various key institutions within the ecosystem. So it's that structure that I liked about, and the way it's organized that gives you clarity. Even as you speak, you find that you have clarity in what you're talking about. Thank you so much, Diana.
Thank you so much, Muka. All right. I mean, that was really rich. Now let's move to see what they found in when they were doing the analysis of identifying binding constraint. So, I mean, what was it, right? I mean, they look at all these different obstacles, and for different countries, they found different constraints. So let me start with Miguel again. Miguel, can you hear me?
Yes.
Okay, thank you. So from your application of the decision tree methodology a few years ago, you found that the regulatory framework, as all the constraints, regulatory framework stand out as one, as a binding constraint for the expansion of digital financial services in Mexico. Please explain us why, and also tell us whether you believe that constraints remain binding today, right? Because things change, right? What is your assessment of Mexico's capacity to have addressed or to be addressed at that constraint?
Yeah, well, this question lets me talk about something that is very interesting about this methodology, and which is not very evident the first time you see it. But with this the decision tree, you could think of it as a snapshot, that it gives you a picture of where are the root causes today, and then you can direct all your efforts towards those causes. But the point I want to make is that it's not really a snapshot, it's more like a picture, because once you identify those constraints, those main constraints, there can be many other obstacles in the way that won't automatically get solved. So Mexico, for example, indeed, we found that the institutional framework was the root cause, the very burdensome rules and regulations that institutions had to comply with in order to operate, which meant that only the huge big banks, which were already established, were the only players in the game. So once you release that constraint, which was already in some way addressed by a change in law some years before, the problem was that even though the rules of the game had changed, the institution that had to operate the changes in law, that is, to identify with new entrants into the system, to very efficiently check them and verify that they comply with the new rules, which were much less burdensome. That institution in charge of the operation was very inefficient. So although there were many applications, all those were held because the country had not yet adapted institutionally to that new framework. So what happened in Mexico actually was quite surprising, and it makes it a very interesting case beyond the work we did, because we did this work in 2001. But what happened after we finished this paper, where we identified this as a constraint, actually that started changing. All those applications that were queuing started to get approved. And now in the course of 4 years after the change in the institutional framework was effective, as to speak, Now it's a very different country in those terms. In 4 years, there is a huge number of small fintechs that have proliferated. The number and proportion of people in Mexico that have access to technology and to financial services, digital financial services, has simply increased incredibly. So that shows that what we identified as a constraint was really a constraint, and when you release the constraint, then things really change. But again, going to my second point, that means that that's not the end of the story. That's the start of the story. Because once you release the constraint, then you have to follow up and see if the symptoms disappear. You have to look at other barriers in the system that won't let the system work in its full capacity. So it's a matter of taking action and working on that constraint, like the case of Mexico. But then after some years, you have to recalibrate and you have to look at the system again and look at it, if it's at its full potential or not. And if it's not, the methodology is very helpful at giving you a very complete context, and you will be able to identify again which elements can trigger even faster change.
Excellent, Miguel. And yeah, again, very important point, right? I mean, the decision tree allows you at a given point in time to identify a binding constraint. But that doesn't mean that all the constraints are not relevant anymore. Mm-hmm. That only means that you need to first remove that constraint. That's the most restrictive constraint. And then perhaps other constraints are going to appear as the ones that are the more binding now, right? It's only that you are going to be working in a systematic way and in the most efficient way, and will get the best results because you are attacking the ones that are actually constraining. Great.
Exactly.
So next, Solomon, a question for you. So you recently completed the decision tree course online, and you found that insufficient competition, both in the provision of banking services and digital infrastructure, is a binding constraint in Ethiopia. Please explain why is the crucial constraint and how did you arrive to that conclusion?
Thank you, Liliana. Yes, when it comes to the binding constraints in Ethiopia's financial inclusion, of course, there are many constraints identified, both in demand and the supply side, but we prioritize the most binding constraints. One of them is that, as you already mentioned, that's limited competition. So in terms of, for example, in the overall economic competitiveness, the Ethiopian economy is not, it's below average from the world. Most of the activities are being carried out by government, and the private sector participation is, even though it is been growing since last few years, however, still the government activities is very significant. You know, we are more than 130 million population. Again, the financial inclusion rate stood at less than 50%. So the banking services, including of the payment services, are largely concentrated in a few players, particularly the government-owned commercial banks. It owns more than 50% of the total market share of the financial services overall in the country. And it is, as I mentioned, it is owned by the government. And it also shares 2/3 of the digital transactions that is processed annually. And it also shares more than 75% of the digital payment channels, including POS, ATMs, and even the agent networks. And 2/3 of the total transaction account maintained in the country is within this the bank. And again, majority of the payments from government to people to the government payments are also being made by this commercial bank. So the commercial bank of Ethiopia also the key player in terms of the mobile banking providers. Most of the transaction, more than 80% of the transactions that are conducted digitally is coming from the mobile banking application, which is unlike in other countries. Of course, we have also non-bank players in the market, but their share is quite insignificant. when it comes to the interoperability as well, so the major challenge is resistance from the main players to be interoperable. So as we all know that interoperability is one of the approach that we can address the financial inclusion challenge, particularly to provide the financial services across the rural areas, particularly. It is not necessarily to be to have account in one service providers to access the financial services if we maintain efficient interoperability. So one of the challenge in this regard is that resistance not to be interoperable, because the market owner and the commercial bank owns the major share, so it is a resistance to be interoperable. So we have achieved interoperability, of course, in terms of infrastructure level. However, in terms of service level, in terms of efficiency, it is not yet achieved fully. For example, so they are not making all of the service interoperable. They only make the P2P, for example, and they also put limits on the transaction that's going from one service providers to another. And even the agent interoperability is not maintained. Even though as a regulator, we put non-exclusivity for agents, but a given agent practically in the market is only serving a one service provider, which is the market dominant. And the other is the telecom. It's just like the banking sector, our telecom services and the digital providers is also owned by a single company, which is owned as well by the government. So we have two telecom operators in Ethiopia, but more than 95% of the market share is owned by a given telecom operator. So all in all, these factors undermines the financial inclusion effort of the country. So we have to work on this to mitigate the potential challenges. And in terms of market share, in terms of product and services, more than 50 and 60% of the market is being owned by the Commercial Bank of Ethiopia and the banking sector. But I want to also highlight here, we recently started the mobile money services, the telco-led mobile money services. Again, we are also witnessing the dominance of a one telecom operator in the market in terms of mobile money. So most of the mobile money operators, users are being the customer of this, the government-owned mobile money operator. So that the low level of competition is one of the major binding constraints that I identified and that I started to work on as an institution to tackle this binding constraints, so that we will see how that solution, the policy intervention, will have an impact in the near future. Thank you, Liliana.
Thank you, Solomon. Muka, well, you also took recently the Decision Tree course. So in your case, you found another constraint of us binding, and that was the provision of digital infrastructure. So could you please explain how you reached that conclusions and what indicators and exercises in the course led you to actually arrive to that conclusion?
Okay. Thank you, Elena. Indeed, after looking at all the factors identified both on the supply side and demand side, I think one that I found to be more binding and that could unlock much of what we're having in the space of financial inclusion was the need for digital financial services infrastructure, particularly in the rural parts of the country. Because I looked at the various databases data sets that were provided, very insightful, as mentioned. I looked at data from when I looked at the data from the Economist Impact Inclusive Internet database. It's able to show me. I was able to see what is it that we can do in terms of mobile services compared to other countries in the same geographical region, compared to other countries in the same other income levels, or even the world at large. So there, of course, when we looked at mobile services, the provision of the services in Zambia based on this database, I noticed that we were doing fine in terms of when you look at subscribers per 100 inhabitants, we are more than the average. When I look at the level of access to 2G network, I think this was the highest. But when I came to look at 3G coverage in my country, I find that this is quite not as competitive as compared to the other countries. Then I went and looked at internet services as well. How are these facilitated? Because when you look at mobile digital financial services, it covers the usage of the internet, the internet, and it comes in key, and also the usage of the GSM network, like I mentioned, 2G, 3G, 4G, and 5G networks. So when we looked at the internet services, so it was noted that again, we look at households accessing internet services, we are lower than what we saw as a world average. What I saw as a world average based on the data that I looked at from the International Telecommunication Union database. And also when I look at the access to electricity, particularly in the rural parts of the country, I think this is quite low as well in terms of the figures that I saw. And in the reliability of the internet, I think this was placed at about 40%, at 40.14, which was falling below both the global and group averages. And then also looked at the cost of data, or mobile data, particularly 1 GB compared to the world and the world average. I noted that I think in our case was a bit on the higher side compared to the world market, and this can be a major barrier for us to drive financial uptake, especially if using mobile phones for purposes of or smartphones for purposes of financial for increasing financial inclusion. And also looked at particularly the challenges in the rural areas were quite high, which again, when I look at the assessment that I did, looking at all the data sets that I looked at, I also went and looked at now locally what we have done, particularly when I looked at the National Financial Inclusion Strategy of 2024 to 2028. Because of this course that I went through, I wanted to just assess how do things look when I looked at our assessment of this financial inclusion strategy. And I noted that the challenges that I noted from our assessment, I think were similar to what has been picked when it comes to infrastructure improvements in the market. In our national financial inclusion strategy, I note that also the limited infrastructure in rural areas identified the cost of mobile phones or mobile devices also was noted as also one of the challenges that needs to be addressed in the current strategy. Increase in terms of access points are those factors that need to be also addressed going forward. So that structured approach that I followed, I think it was able to lead me to the fact that what has been identified in even other surveys, documents produced in country, also there's something there study, and except that this now increases, I think, the way you approach your assessment of various sectors in the various sectors and factors within the ecosystem. So it's very helpful, and that's why I settled for this digital infrastructure need for it to be enhanced, for us to be able to, particularly in rural areas, for us to be able to unlock the financial inclusion levels that we need. Also, looking at the methodology, you find that it allows you to look at other data sets, local data sets. So looking at also our local surveys, you find that ICT surveys, you find that there's work that we need to do, particularly again in the increasing the infrastructure that we should support digital financial services. We look at the towers that we need to be able to support digital financial services in rural areas. So all that, the efforts being made in all those areas, and I think government is putting up place a lot of measures that are helping to resolve these issues that are coming up, particularly with the digital infrastructure. So I found this to be particularly why it is a challenge, particularly in the rural areas, is that when I look at what it is in the urban areas, you find that because there are no constraints in the urban areas. Therefore, you find that the usage of digital financial services is higher. Higher in terms of percentages. Even households that are using digital financial services in urban area compared to rural areas, you find that the numbers are higher. So you find that where there are no restrictions, people are thriving in terms of access to the usage of these services. Where there are challenges, you find that there are challenges of people using these services, and even fewer providers are going in those areas. So the aim is to ensure that we unlock even these rural areas where we may be having, I think, shortcomings, in particular to do with digital financial infrastructure. And that's my submission.
Thank you so much, Muka. Thank you. Thank you very much. Okay, now I have a question for the participants in general in this webinar. You have heard a number of constraints. Can we have the poll, please? What I would like to know is, just based on what you've been hearing, please mark which ones you think is the most important binding constraint in your country. You can choose 2, but no more than 2. And there are the different, just you can go just, you know, scroll down to see all the constraints, and we'll take 2 minutes max because we are really running out of time now. So, wow, all of them are somebody's. Okay, so digital infrastructure is half so far. Competition 22. Okay, so still digital financial inclusion, digital financial infrastructure taking the lead. Just 30 more seconds, please. And then if you could, okay, it's basically divided. Certainly, infrastructure takes the lead. No. Okay, so financial literacy, I did not see. I did not scroll down sufficiently. Financial and technical literacy is a real important constraint here. And then the reason why this add to 100% is because some of you have marked more than 1. And so from what I see now, the most important constraints, according to you, before taking the course, of course, but is digital financial infrastructure and financial literacy. This is a very interesting result. I mean, you should take the course to see whether that's true, because, you know, with the methodology, you can confirm or deny your priors. So, all right, so we'll end the poll now. And I think we can continue with our discussion. We have very few minutes, and I have a number of questions from the audience. So what I'm going to do is I'm going to very quickly respond some of the questions from the audience, and then I'm going to have only 1 minute each to each participant, because we really are running out of time. It was a very rich discussion. To finalize and give you the last word, but it's just 1 minute, okay? So let me answer some of the questions from the audience. One of the questions we're asking whether the prices that we publish in the course are current or historical. They are current as of now, and we also publish historical data for comparisons. Yes, current meaning that as much as they are available, because what we do is we try to use data that come from common sources so that you can actually have comparisons between countries. And that talks about another question, which is the quality of the data. We are aware that the quality of the data could be troublesome, and so that's why we use, you know, just large databases from well-known sources. But as you will see, the number of databases is really large, so most likely you will find a lot of information for you to work on. There was another very interesting question that was asking or was telling us that, you know, Liliana, you were talking about prices, fees, but what about other costs, like related to commuting to a financial service provider or onboarding time, of all other costs that customers have to be involved with? And the answer is yes, absolutely. And we recognize that. And we call them indirect costs. And there is a whole section in the course that allows you to calculate them, to estimate them, and then compare them with other countries. So definitely this is a very important issue. There was another question about coordination, what we meant by coordination. And coordination is not just the simple saying of, you coordinate between different authorities or different providers. No, it's more than that. Coordination relates to the fact that in many countries, and it's called a coordination problem, there is a chicken and egg problem, meaning that suppliers don't come because there's not enough customers, and customers don't come because the service is not offered but by very few providers. So there is a chicken and egg problem. Who should come? And then only policies that actually start breaking that separation and try to coordinate the participation of both providers and customer will solve for this problem. Okay, so those are the ones that I am taking now because there's not much time. And just 1 minute for each of you to tell us very quickly how do you see the practical usefulness of the course in your after taking the course in your country, but have to be very briefly because, as you can see, we are really have run out of time already. So let's start with Solomon.
Thank you, Liliana. Okay, I try to be quick as I can. So there are one of the binding constraints that we had that identified in the courses, that is limited competition, and why this limited competition is the binding constraint is that's the main challenge is accessibility to the basic data and the infrastructure. So that what I decided is to include building up of DPI, creating and democratizing of accessing of the systems to the wider financial service providers, so that it will be created equal playing field in the market, so that the financial service providers can offer services that can alleviate the financial inclusion challenge. So to do this, we are planning in the coming 1 or 2 years to interconnect the critical elements of DPI, which are the national ID, the identification system, the instant payments, which is in fact in terms of systems, in terms of technology, it is already in place, but in terms of service and products, it has not been wider implemented. So we need to connect these two critical systems and create the common data system or sharing mechanism where the FSCPs can able to access this data and provide the financial services widely. Okay. So one of the actions that we identified to alleviate the limited competition is this action, and we will implement it in the coming 2 or 3 years to ease or to alleviate these binding constraints. Thank you very much.
Thank you, Solomon. Great to hear that. Great to hear that action is taken, that it's not just a course, that you actually take action. Muka, similar question to you. How are you using the result from the course to inform and guide policy discussions?
Okay, thank you, Liliana. So in terms of the course itself, it's very useful. As I mentioned, gives you quite, I think, a structured way of looking at various challenges that may be in the digital financial services space, and it improves in the way you interact with other key stakeholders. In my work, I interact with a lot of key stakeholders. So even in our discussions, you're able to, I think, guide the discussions well, and structure that you're able to cover most of the areas that require to be covered. You may find yourself talking about one point, only to find that you could say a lot of things, only to find that you're just talking about one factor. But with this course, you're able to talk about all the factors and be holistic in your conversation, or as you discuss with other stakeholders in the ecosystem. We have, in terms of coordination, a collaborative framework that we use to those things that fall within outside of our ambit, we can easily share and be able to be taken up by other institutions. So I think it's a useful course in terms of structure and having, I think, worthwhile dialogue with other stakeholders in the market. Thank you so much.
Thank you, Muka. Miguel, last word to you. I know that the decision tree methodology was included in the country's financial inclusion strategy some time ago. Do you have any further recommendations for policymakers?
Well, especially for those that are going to take the course, more for them. I think this methodology, since it's something that you haven't done before, there's always the temptation to look at the system and look at the symptoms, which are many times most evident, and go for that. But this methodology will force you to think harder, to go deeper, and it's worth doing it, because sometimes it will be more difficult. But since the methodology is very well structured and it allows you to do that in a very orderly way, it is worth devoting more time and effort and data analysis and having interviews with people. And I mean, it's a demanding exercise, but it's definitely worth it. So I would encourage you to go through the full process to really be able to reap the benefits.
Thank you for those encouraging words, Miguel. And thank you to all of you. I mean, this was a great panel, really rich. I wish we had more time, but time flew. So back to you, Abby, for your final closing.
Okay, great. Thank you very much, Liliana, and to the panelists and participants for such an engaging discussion. Before we close, I just wanted to go quickly over what's next. So first of all, we'd love to hear from you all to get your feedback. When you close your Zoom window, a brief survey will appear in your browser, and we'd really appreciate it if you can take a moment to respond to those survey questions. As mentioned in the beginning, the recording from this webinar and the presentations will be shared on the FinDev Gateway website after the webinar. And once the recording is available, we'll send a follow-up email with the recording to all of those who registered for the webinar. And we invite you to please feel free to share that with your network, anyone who might be interested in this topic. And for more information on CGD's Decision Tree course, visit decisiontree.cgdev.org. And I think Sarah has been putting those links in the chat as well, so you can access it from there. And of course, for more financial inclusion resources, please visit findevgateway.org. Once again, a big thank you to the panelists and to all of you who joined the webinar today for your questions and engagement on the topic. Thank you and have a good day or evening wherever you are.
Thank you.
Thank you.
Bye-bye.